Would you like to be informed about the most recent developments about Tesla and its standing in the electric vehicle industry? We'll talk about a lot of amazing news in this video, enough to turn even the largest Tesla bear into a full-fledged bull. Prepare to explore in detail Tesla's recent price reductions for the Model S and Model X, the company's intentions to lower the price of its upcoming model generation, and the effects these will have on rivals. We'll also talk about Tesla's potential for expansion, its cutting-edge technology, the supercharger network, and its profitability in 2022. We'll examine more closely at the reasons why Tesla supporters are still optimistic about the company's future as investors argue over whether or not to purchase Tesla shares. But before we get started, allow me to remind everyone to subscribe to our channel and remember to give this video a huge thumbs up. Well, let's get started. As the business lowers the price of the Model S and Model X for the second time this year, Tesla's stock is down roughly 1%. Many had anticipated a major, unexpected revelation, but this did not materialize. Tesla currently seems to have better news, despite a difficult few months and an unsatisfactory Investor Day in early March. Many people may have been optimistic following Investor Day due to the company's affirmation of its goal of 20 million deliveries by 2023, which would give it a 24% market share. Shareholders and enthusiasts of Tesla are ecstatic about this news. According to a recent Wall Street Journal article, Elon Musk's cost-cutting goals at Tesla are placing pressure on the company's electric vehicle competitors. Given this, GM, Ford, and Volkswagen are being questioned about their attempts to reduce the cost of next models. Tesla has declared its intention to use cutting-edge production processes in smaller factories to decrease the cost of its upcoming generation of automobiles in half. Elon Musk, the CEO of Tesla, and other executives claim that these modifications might result in a new generation of cars costing about $25,000. The next generation of cars were expected to be unveiled at a formal product unveiling, but Musk stated that investors would not be able to see them until then. Although Tesla hasn't yet produced a car for $25,000, the business has gradually reduced the cost of production, bringing down the price of several models by thousands of dollars. Although conventional automakers like Ford and General Motors have recently made millions of dollars on electrification investments, investors doubt they will be able to match Tesla's profitability and cost effectiveness. Elon Musk, the CEO of Tesla, seems to have an inbuilt knack for making almost ridiculously ambitious promises that put pressure on both himself and the entire business. He is aware, though, that even if he just meets half of his objective, it will still revolutionize the market and provide him a significant competitive edge. Recently, Moody's Investor Services gave Tesla a BA3 rating with a stable outlook. This increase is in line with Moody's prediction that Tesla would continue to be one of the leading producers of battery electric vehicles, with a growing global footprint and extremely high profitability. Governance factors, such as Tesla's responsible financial practices and management's demonstrated operational success, are also taken into account in this upgrade. Especially since the Model 3 introduced Tesla to the electric vehicle market in 2017, the company has been actively increasing production in its gigafactories across the globe. Following the launch of the Model Y and the construction of a factory in Shanghai, the business is currently expanding production at its gigafactories in Berlin and Texas. Tesla's newest U.S. production plant is located in Travis County, Texas. The business filed an annual compliance report with the county, stating that the number of employees at the Texas Gigafactory tripled in 2022 over the previous year. According to the SEC filing from January, there was a 23% rise in the overall number of employees across all Tesla facilities, which included this development. Despite a pattern of layoffs in the aid industry, Tesla experienced a significant rise in full-time staff from the prior year, adding 28,565 more people by the end of 2022, to reach 127,855. It is anticipated to deliver the Cybertruck this year and has begun constructing the Semi. Tesla intends to open a gigafactory in Mexico, which will increase the company's global footprint once more. Regarding ratings, Moody's has given Tesla a BA3 rating, placing it in the investment grade range. With a BA3 rating, Tesla is classified as long-term investment grade, which indicates that Moody's thinks its credit risks are mild. In the generic rating category, Tesla's BA3 rating is at the bottom. Tesla is a well-known leader in the electric vehicle (EV) business and a significant player in the market for battery electric vehicles. With its Model S, Model X, Model 3, and Model Y cars, it competes in the luxury automobile and crossover SUV markets. The business uses roughly 4% of sales to fund R&D in an effort to lower production costs and enhance its industry-leading technologies. As EVs gain popularity, investors are drawn to Tesla's growth potential. In 2022, Tesla established 2 new factories. Over the following few years, the business intends to introduce new automobiles, such as a sports car, light truck, semi-truck, and reasonably priced sedan and SUV. As everyone is aware, Tesla has made a name for itself as one of the world's top producers of electric cars, EVs, and it currently operates gigafactories in Shanghai, Berlin, and Texas. The business has also started manufacturing the Semi, and this year's delivery of the Cybertruck is anticipated. With the Gigafactory in Mexico set to open soon, it is anticipated that Tesla's global footprint will also increase. Given that it is categorized as a long-term investment-grade issuer, Moody's BA3 rating suggests that the company has moderate credit risks. Given that established automakers are starting to invest extensively in EV development, which could lead to increasing competition for Tesla, investors are discussing whether or not Tesla stock is a good investment. Notwithstanding these reservations, supporters of Tesla think that the company's EV, autonomous driving, battery, and solar power systems technologies have the ability to upend the car and electricity production sectors. Compared to other EVs on the market, Tesla's supercharger network and its cutting-edge technologies offer the best functionality. At a price-to-earnings multiple of 55, Tesla's stock is currently costly, yet historically cheap for the firm. Investors are paying for quality, as seen by the 37% increase in revenue and the 32% return on equity. Tesla has demonstrated its willingness to adapt to heightened competition, as evidenced by its recent announcement of price reductions on a number of its models, particularly in the Chinese market. Those who purchase Tesla shares now with a long-term investment strategy will probably reap rewards as the business increases production and keeps its position as the leader of the expanding electric vehicle market. Notable was Tesla's profitability for the entire year 2022, as its operating income more than doubled to $13.7 billion. As a result, Tesla will have greater room to maintain low pricing, grow its market share, and reduce its dependency on outside funding. With a $623 billion market capitalization, it surpasses the combined value of all other American automakers. Despite being higher than its conventional competitors, Tesla's projected price-to-earnings ratio of 48 is still fair given the company's potential for development as a pure-play electric automaker. Over time, Tesla's management anticipates that vehicle deliveries would increase at a 50% compound annual growth rate, THR, which would result in large increases in revenue and profit. Even if the price of Tesla shares has increased since the beginning of 2023, long-term investors still believe the company is worth investing in. A long-term investment plan is essential for generating steady profits in the stock market, despite the opinions of some analysts who contend that investors may have lost out on the opportunity to purchase the company at a cheaper price. Several analysts maintain that Tesla is still the market leader for electric vehicles globally despite increased competition. The company's advantages include self-driving technology and good margins due to its vertical integration. BofA, Mizuho, RBC Capital Markets, and Jefferies analysts all keep their buy ratings on Tesla shares, although they have raised their price targets to $230 from $200. Model 3 and